My name is Aretha Higgins, and I am the Director of Homeowner Services, and I am so happy to be able to bring this information to you all. We love just being able to share as much knowledge, provide much knowledge as possible to you all when it comes down to that home buying process. So we are very thankful for our partners, whom you all will meet. One of them today, Mr. Kip Dixon with Cadence Bank. We are so happy to have him here. And so we're not going to hold you. We're going to go ahead and start with our session on steps to becoming mortgage ready. Again, I hope you all are taking notes because there's going to be lots of information shared, lots of helpful nuggets to help guide you all through this home buying journey. So with that being said, I'm going to turn it over to Mr. Kip Dixon. Welcome, Kip.
Hello, Aretha. Uh, Thank you so much for having me, and I'm truly delighted to be here. Um, I'm just honored. This is a special week, uh, and just being a part of this for Habitat is what we're here for. Like I was telling you earlier, I guess it's part of our ministry.
Yes, absolutely.
And trying to just help folks get into homes, but at the same token, and give them the tools to make sure that it's a positive process. Um, Again, my name is Kip Dixon, and I work for Cadence Bank, but I like to say I'm doing God's work by helping as many people become qualified to you know uh, to become homeowners. I am in the process of just sharing my file, sharing this. So I don't know if you're able to see.
Yes, we can see it. Yeah,
Okay,
just need you to
it's
go
just
ahead
one
and put it
reason
in
it's not. I
presentation
was
mode.
trying to put it back into the viewer mode.
Yeah.
Eh, Well, you know what? We can just do it this way.
Yes.
It's more
Long
way
as,
to skin a
long,
possum, right?
yeah, as long as they can see the information.
Yes, yes. Okay, so this is our first time home buyers guide. And I use this presentation to make sure that when you're looking to purchase a home, that you start off on the right foot. Um, you're going to be hearing from so many people. As soon as you say, I want to buy a home, you're going to get advice from people that if you say it at the Washington, they're going to tell you what they did and what they didn't do. And your cousin, aunt, everybody going to come out the woodworks. So this is our way of not only giving you some tools and giving you a guide, but so you can stand on your own feet and make your decisions that's best for you. Um, so with that being said, this is one of the things that we created here at Cadence Bank to help our potential clients as to become home buyers. These are wonderful times. Let's just dive into it. So on the table of contents in this presentation, we talk about checking your credit as well as knowing your debt to income and what debt, how to pay down debt, some methods, determine your down payment if there is a down payment, depending on the program you select, as well as what documents that the most lenders will be looking at for you to provide, and then talk to a mortgage professional. Hopefully that person will be me. And so when you apply for a mortgage, one of the factors your lenders will be most interested in is your personal credit. Um, I always tell clients to always check their credit, and you can do it for free. Annually, you can do it by annualcreditreport.com. And I encourage you to write that down, mainly because this gives you one free copy of your credit report once a year. And what I have clients do, and potential clients, I say, hey, why don't you put this in your calendar? Just like you have your annual checkup with your doctor or a specialist or what have you, do an annual credit checkup, because sometimes things may pop up on your credit that you're not even aware of, but you can be right on top of it. Uh, and so you can always do this, and it can be, it's free. And I know some of these Experian and TransUnion and Equifax, you can also go to and create a file for them, a profile for them, and check your credit on their websites as well. Um, and I always tell clients just review that information correctly, because it may be a name. Somebody may share your name and may something may be on your credit report inadvertently. Or there may be a social security number, like one number off, and things may just pop up. Or and I've seen it where some clients' parents had them on a utility bill when they were 3 years old and didn't even realize it. So, there are things that you can do, and just again, I encourage you to review all your accounts and see, if you have certain loans and things like that. So, but if you do need to correct any errors that you may find on your credit report, these are the credit bureaus, Equifax, Experian, and TransUnion. And so I would just encourage you to reach out to them if that's something that ever pops up. And so some of the ways, because so let's just say you do pull up your credit report and you're like, wait a minute, I need to work on some things. So this right here is our FICO score metrics. Scores. You can go from 300 to 850. And yes, I've seen some between 300 and 579, and I've also seen very few above 800, but there are some. And most likely, the majority of folks are between the 680 and 740-ish scores. So, there's really your scores are in they will give you a good window as to what you can be approved for. Or certain programs require certain specific credit scores, and some require you to have a certain type of credit profile. Again, those are things that we can talk through on a one-on-one session, or you can speak to your lender and they can walk you through that as well. And so, so different lenders have different minimum credit score requirements for approving loans. So one of the things I always tell clients, the way you can boost your chances of securing a favorable loan, where the interest rate may not be as high, as well as your mortgage insurance may not be as high, as well as your hazard insurance, is to always pay your bills on time. And if you have it auto pay or what have you, make sure you put that in your calendar as well, because sometimes you may get an email that say, okay, we're changing your payment date to X, and you normally pay on Y. And so that may mess up your payment schedule based off the bills you already have set aside to make payments on. So you want to keep up to date on that. Limit the number of credit cards you use. And so we say that because revolving credit, you want to be below 30. And if you have a lot of credit, revolving credit, most people think that's a good thing, but not necessarily if you're over that 30% usage threshold. Again, we can have that conversation one-on-one and decide, what, methods will be best for you in particular. Again, managing your debt to income ratio, because that will dictate the type of home you most likely be able to qualify, looking at your affordability. And again, be consistent in your use of credit. Just don't go borrow stuff and take out loans and this and that and don't make payments on them, because that really impacts someone, especially if you have limited credit. And one missed payment, it will really do a lot of harm to your overall credit. And one thing that I always tell clients to do, if you have an old credit account, keep those open, because that shows a positive trend for you. So I'm going to go to the next slide. Knowing your debt to income ratio and paying down debt. So as I was speaking earlier, in addition to your credit score, we will look at, as a lender, your personal debt to income ratio, which basically is the proportion of your debt you owe compared to your gross monthly income. So depending on the program, you may have to be at a 35 front end ratio and debt to income back end ratio at 45, or you could be a 40 and 45, or you can be a 40 and 50. So it just really is going to depend on the type of product you're looking at. But it'd be wise to know what your overall debt is. And that's one of the things that I have a lot of clients say they want to buy a $500,000 home, but their debt to income ratio is like at a 60 or 70, based off of the home that they're looking at, because they look on Zillow and all these other locations, but it doesn't really factor in their debt and the estimated credit interest rate that they will receive. So you want to be mindful of where your debt is, and here's some methods that helping pay down your debt. It's called like the snowball method, which is one of the most popular methods, where you pay off your debts from the smallest first to your largest balance last. I've seen several people use that through the years. And also the debt avalanche method, were known as the highest interest method. This is another popular method, which you pay off your debts from the highest interest rate to the lowest interest rate. And we have a calculator, a Cadence Bank credit card calculator you can use to see how your different debt payment options work. Um, and so those are good methods to help you with that process. And again, the more money you can put down, the lower your total mortgage and monthly payments will be. Or also, you can look at it like this: the more money I can save, that'll help me. And that's what I'm talking about now, is determining your down payment. Depending on the program, you may not have to pay a down payment, but you will pay closing costs. A lot of people, when we speak to that and speak to, well, there's no down payment on specific programs, they really think that they can buy a house without putting earnest money, option fee, and paying closing costs. So I just want to put that out there on record that yes, there are certain programs, but you still will have to have some skin in the game. And one of the things that as a lender, we're going to look at is, how do you manage your current bills? How do you, how are you able to save? Are you able to, make your payments on time in a timely manner? So all that's going to factor in determining whether you have to pay a down payment and how much you have to pay. And so that's one of the things that when you talk to a professional, they will help you, see, because it's on an individual by individual basis, what's best for you and how you can become a homeowner, without the least amount of pain, meaning,
Yeah.
where you don't have to put as much down and closing costs. And so next we talk about gathering your documents. And here at Cadence Bank, we have a wonderful program where we streamlined our process to where you can upload your documents. We have a program called Finicity, and we can pull your employment information as well as your banking information, where the bank that you're planning on using to show what your income is. Like for instance, if your company does auto deposit for your pay, that makes it much simpler. And so we're not having to reach out to you often and saying, hey, we need this, we need this down, we need your pay stubs, we need your bank statements. So we're all trying to do what we can to make the process as streamlined and as comfortable as we possibly can make it for you as the client and customer. And so, but these are some of the things that we look for: your copies of your most recent pay stubs. That's usually the last 30 days pay stubs. The names and addresses of your employers, your W-2 forms for the last 2 years, 1099 forms or profit and loss statements. That's basically if you own a business or self-employed, or you have a side gig that you want to use. But just remember that it says the past 2 years. So I've had a lot of clients that switch from W-2 to go to a self-employed side gig, Schedule C income, but we have to have 2 years to be able to calculate the income for them. And then in some cases, we will request your tax returns for the past 2 years. Some cases we won't. It depends, again, on the program that you're seeking to purchase your home with. Your bank account, your brokerage and credit card statements. Really, I won't ask for a credit card statement unless if we're paying that credit card off, and we have to reach out and get information on that. And there may be other statements where you have money and that you want to use from a brokerage, like your 401k and things of that nature. And so, just two important things to note: that if you're applying for a pre approval, you will likely need to provide these documents again after you fill out the formal application. So, but what we do is I ask the questions: what's your time frame? Are you trying to buy in a year? Or are you trying to buy in the next 30 to 90 days? So that will dictate how we have the discussion when it comes to your documentations that's needed. So one of the things I do want to share is when you're getting that process, that mindset that you are wanting to purchase a home, at that point, forget your social security number. And when you go to the store, they ask you, hey, you can get 10% off if you apply for this credit card. Because I share this with you because a lot of people will be working on it and they'll see their credit scores going up and they'll be like, oh, I can go buy me a car, I can get this new outfit and do all this. But yeah, you can go do all that. But at the same token, it may turns out you won't be buying a house. So you want to have that conversation with your lender. Say, hey, I have to buy a car. I have to go do this. I just need to know what I can do. What room, how much room do I have if I still want to buy this $500,000 home? Or, so you want to have those questions with your lender because we're here we're on your same team. We're here to help you become a homeowner. And so, as I said earlier, talk to a mortgage professional. Once you completed all the above and know that there's a difference between pre-qualification and pre-approval. So, you know, have your questions, do your research. Habitat for Humanity does a wonderful job in preparing borrowers to become homeowners. They have a really great program that you can be involved with, and they will get you from A to B. And everyone that has come from Habitat that had the honor to work with have already been mortgage ready. They understand the terms. They know when I speak to them and say debt to income, what it means. They know when I say your revolving credit is over 30%, they know what it means. So I want to encourage you to work with Habitat as much as you can and know that they will prepare you for home ownership. And so, you know, some of the things that you want to find out when you speak to a lender is how much experience do they have and their team have. Like for me, I've been doing this close to it's been a while. And I have a fantastic team. I have a great processor. I have a great assistant and a great operations manager and a branch manager. And we all work so well together and we're all local. That's what makes it unique for me is that I have everyone I need to work with. They're local or in the state of Texas. So that's a positive. And that makes that you want someone who can pick up the phone or send an email and get a response within 24 hours. I say 24 hours, but I get it much sooner. And then, someone who's going to walk you through the process, not just going to tell you what you want to hear, but mostly tell you what, based off of your particular profile, things that you can work on, things that, so make some suggestions like, hey, have you thought about doing this? Have you thought about doing that? If we look at this house, well, it's a condo. So we got HOA fees. So you want someone to have that conversation with you and listen to you, because that's one of the things that I pride myself on. I like to listen because I want to hear what your overall goal is and what your plans are. Because you're a unique individual and your dreams of home ownership they look different from the person that's standing next to you. So, and we will have those conversations. And then you want someone who's going to talk to you about the costs. Certain loans will cost, the fees may be higher. Certain programs that you may want to do may have higher fees, and that may impact how much you receive in down payment assistance and so forth. And so, again, you want someone who's going to work with you and listen to you and understand what your goals are. Again, and once you choose a lender, meet with the loan officer and review the different mortgage options available to you. Um, and understand what a fixed rate mortgage is versus an adjustable rate. I've been getting that question a lot lately. But a fixed rate mortgage is the interest rate will remain the same for the entire term of your loan. So you may have mortgage terms of 10, 15, 20, and 30. The majority of folks that are now working with me are doing 30-year fixed mortgages. So, basically that is the term when you hear fixed mortgage term rate is, that's the length of the time you will make payments until you own your home free and clear. Now, on an adjustable rate, those are more like ARMs. Those are highly advanced type of products for someone who is understanding of how that works, because the interest rate will fluctuate based on the current market rates after an initial fixed rate period. So you may hear like 5 1 arms, 7 year 1 7 1 arms. So it just kind of depends on what you're looking at. And I do a lot of these for customers who are executives who are going to be moving in the area where they're going, and they may be there for, they know their contract is for 4 or 5 years or 3 years, and so and that's just how, because they're in a rotation for their type of work that they're doing. So again, your lender will be able to walk you through all of that. And so at the next thing you want to do is, again, when you decide on whether you're going to do a fixed rate or adjusted rate, it's better that for you depends on two factors that I see all the time is, what is your risk tolerance? A fixed rate is definitely gonna mortgage is going to eliminate the interest rate risk because the rate stays the same over the entire loan term. However, your taxes and your insurance most likely will change. And if you have mortgage insurance, it may go down as well. So the taxes may go up depending on the area where you purchase. And one thing about insurance, I explain to clients, you want to check your insurance annually as well, especially if it's in an escrow with your taxes. It may go up and you may not realize it. So right now, what we're fielding are a bunch of calls for clients who just received their county assessments on their homes, and their taxes have gone up, and of course, their insurance may most likely have gone up, and their payments have jumped a good bit. And so, those are things you want to be prepared for. And also what I was talking about earlier on your home ownership time frame. If you're going to be there 30 years, let's look at a fixed rate. And if you're going to be short term, then we'll definitely look at an ARM. But most first time home buyers are looking at a 30-year fixed term. And so there are special type of mortgage programs. So depending on your lender. And here at Cadence Bank, I must say we have so many special programs. We have a one-time close program. We have several pro- programs where we portfolio products, like for instance, our Right at Home product, which is a zero down, no PMI product. We have a product for medical professionals, which is one of the premier products in the industry. We also have, like I said, a one-time close, and we have a professional product. Those are really unique and niche type products that really, fit a lot of clients who didn't realize they were even able to do those products. So, again, it depends on you. All mortgages are not the same, and it's unique to you. And so I will be honored if you want to talk to me and discuss what Cadence Bank has to offer and how we could help you become a homeowner. But, again, as myself and so a lot of my teammates, we're going to make sure we have you mortgage ready. So when you go and present that conditional approval letter, that when we receive a phone call from the sales agent, that we can say without a doubt that you have already gone through the pre-approval process, and we're confident with the information that we've shared, that we've received from you, we validated and verified. So because we want you to use that letter and be able to feel confident that you can get to closing after you find a home. And so, and also in this guide, you'll see we have a home loan affordability calculators that you can look at as well. And last but not least, ready to get started. So here's my contact details. My phone number is 972-814-3947. I may be reached via email at kip.dixon@cadencebank.com. And I will be honored to serve as your mortgage loan officer. And Aretha, I'm going to turn it back to you for any questions and questions.
Thank you, Kip. Awesome. Thank you so much for your presentation. It was really uh, helpful, I'm sure, to a lot of people on here. We do have some questions that came through. One question that we have is, when doing an annual credit checkup, does it affect our credit? Like, is it a soft or hard pull?
No, it does not. And it won't be, it's just for you and it's for annual. That will not impact your credit at all.
Awesome. Thank you. Uh, any other questions in the chat? I had someone that had their hand raised.
Mhm. I see
Uh,
that.
let me see. Did he put it? Uh, Someone was asking about the documents. Can you explain the documents?
Okay, so on the documents, it's going to depend on the type of your income. So if you are W-2, the process will be somewhat smoother because we're going to ask for your last 30 days pay stubs, your last 60 days bank statements, your ID, and if you're a permanent resident, we're going to get your copy of your front and back of your permanent resident card, your W-2s. Um, and at some point, you're going to have to select an insurance company. So we're going to get the homeowner's insurance declaration, the details, the signed executed contract. Uh, Again, and depending on if you have any kind of Schedule C income, we're going to request your last 2 years tax returns. Make sure they're signed as well. And depending on if you have child support, if you have disability, or, again, everything is unique to you and that'll dictate what type of items that we're going to request.
And Kip, I'm gonna ask you a question that we get a lot of times. People generally want to know, how much do I need to save for closing costs?
Okay, so one of my go-tos is I'd say try to look at about 1.5% to 2% of whatever the loan amount is. Because what you're going to be covering is, depending on the product, if you do choose a down payment program, whether it's FHA, which requires you to do 3.5%, along with you have that along with the closing costs. And the closing costs are going to include like any fees associated with the loan, as well as your 1 year taxes, plus, well, depending on when you close, up until 12/31/20, the end of the year. You pay those taxes, and for the homeowner's insurance, it's 1 year plus 2 or 3 months cushion reserves. So, um, and as well as title. So you may have to pay for a survey, then you're going to have to pay for an appraisal. And you want to have your earnest money and option fee. Again, there's really no one answer, no straight answer about how much you have, because it's going to depend on the loan, the type of product you're looking at, as well as the sales price.
Okay, thank you. Awesome. And like I said, just to be on track with time. Oh, well, one last question.
Okay.
Do you need to have all credit cards paid off before getting
No, 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 no,
mortgage?
no, no. No, just it depends on what you're seeking. If you have your credit cards maxed out, you're most likely that's going to really impact your overall credit. So um, I don't tell people to pay for anything off, to be honest with you. I let them make that decision based off of what they're trying to purchase. I'll provide you that data and then you make your decision. Um, because I think it's best that everything is pretty much I'm here to consult and to listen. But ultimately, you make the decision what's best for you. However, if I know your revolving credit is impacting your credit score, and seeing that it's over the 30% usage, I will encourage you to look at that. But I won't tell you what to do.
Okay, awesome. Well, thank you so much, Kip. Like I said, just trying to be mindful of everybody's time. We did have a session scheduled for 30 minutes, and it was awesome information shared for those 30 minutes. Would you all agree? Uh, Please just let us know how you enjoyed the presentation in the chat. We thank you all for joining us. And we do have our one last presentation this afternoon at 2:00 p.m. And we hope you all can join us. And it will be prepping you all to becoming home buyers as well. So again, join us if you can. And thank you all so much. We appreciate you all. Thank you. And we'll see you later, hopefully. Thank you,
Thank
Kip.
you.
All
All
right. You
right.
all enjoy
All
your day.
right. Bye bye.
Bye-bye.